Welcome to our 9th lesson in the Market Profile Beyond the Basics course. Please remember that trading and investing involve high levels of risk. Future results can be dramatically different from the opinions expressed in this course. Past performance does not guarantee future performance. The presenter may or may not hold positions in the financial instruments discussed. Lesson 9, we are going to be talking about VWAP trading. We're going to be looking at a number of different VWAP strategies. We're going to be looking at what the VWAP is and how it can really help our trading activity. However, before we begin, I would like to review the practical exercise so we can at least apply some of the concepts that we have been discussing and learning. Based on the information shown on this 30-minute chart, would you take a long or short trade, indicate the reasons for your decision, and select the appropriate targets and stop loss for your trade? Alright, so we've got a chart and we have a limited amount of information on the chart, and we want to decide whether we should take a short or long. Well, let's take a look and see what we have. We have some initial balanced lines on our chart, and the first question we're going to ask ourselves really is a very simple question and a very important question that we should always ask before we take any kind of a trade. Is there a trend here? Do we see any type of a trend? And by trend, we want to define the trend as a trend where we're creating higher highs and higher lows, or where there is an apparent directional move in one direction or the other. Now, intentionally, in this case, it is a 30-minute chart, and it's a little bit tricky to determine trend, but hopefully, based on the parameters that you see before you, you should sort of do some detective work, and you'll discern what the trend has been. First of all, we have the simple 50 moving average, and we have the 20 simple moving average above it. Now, albeit the 20 simple moving average has been coming closer to the 20, but it's still nevertheless above it. It has not broken it yet. So if we were to answer the question, is there an apparent trend right now? A visible trend is not there based on the information that we see, but there has been a bullish move in the market. It's always difficult that bears and bulls both start with a B, and easy to confuse the two terms. But in this case, whenever the 20 simple moving average is above the 50, that is certainly a bullish feature on the chart. Now, the 5 simple moving average has broken the 20 and also the 50, but it's curving up. So the first question, is there a trend? And we've answered no definitive trend apparent. However, historically, based on the moving averages, the momentum has been to the upside. Well, what else should we be asking before we decide whether to take a long or a short or no trade at all? Do we have a bullish or bearish open? Well, our open should be quite visible to us with the first 30-minute right here. That's the first 30-minute period, and so there's my initial balance low for the day, and here's my second 30-minute period, and it takes out the high of the first period and continues higher. So is this a bullish or a bearish open? Should be a bullish open because of the fact that the second 30-minute period of the initial balance was able to take out the high of the earlier or the first 30-minute period. So we've got a bullish open on our hands, and remember, we just talked about the fact that we've been in a somewhat of a bullish trend in the past. Let's see what else could we look at. Did our IB range expand lower or higher? That's another indication. Naturally, for a bullish, and we did have a bullish, it should expand higher, and it did. So we did expand the range higher. So far we have several bullish signals, if you will, or signs that the market is in fact trending in a somewhat bullish direction. Now let's continue on and see what else our detective work can tell us. Is our 5 simple moving average rule in effect? Reviewed this rule with you before. Whenever we get a close above or below the simple 5, here's the simple 5 right there, and we just closed above it, and then we get another candle that takes out the high of the prior candle, that is an indication that there is a high probability that prices will continue to move higher. So we do have another bullish indication here based on the simple moving average. I did close above the simple 5 on the 30-minute chart, and I did take out the high of that bar. All right, one more thing we are going to look at. Where are we relative to the prior IB levels? Well, the prior session levels, this was the 200%, and we were well below it, but now we've come back above it, and we've closed with this candle above it. And as a matter of fact, we were able to touch the 150% of the prior day. So we're actually indicating that we're starting to penetrate with price into the zones, the IB zones, the outside zones of the prior day, which is another indication that the market is sort of somewhat bullish. So based on this evidence, I would certainly be more inclined to take a bullish trade, certainly far more than I would consider taking a short trade. So let's take a look and see if our analysis was accurate. I have removed the cover, if you will, or the big box, the big white box I had there, and now you can see what actually happened. If in fact you had taken a long entry based on our 5 simple moving average rule, a close, and then we take out the high, yes, prices did drop back to the 5 simple moving average, but it held. Nevertheless, if you were to take that long entry, certainly you would have to address risk management, and you would also have to be thinking about your targets. But in fact, we were accurate with our assessment of what was happening in the market, and prices did continue to move a little bit higher. The 2 other key questions that we want to answer for ourselves now are, where would we put our stop loss, our risk management? And our risk management will really be right here at this level, which is the high of the first 30-minute period. That's the high that we took out with this candle. If in fact we come back into it and prices drop below that, the likelihood that we will continue higher reduces significantly, and therefore that is a reasonable place for us to put our stop. Well, what about targets? What or where would we look for some potential targets for this long trade? Well, there are a bunch of them that we see on the chart before us. First of all, we would expect that since we are penetrating into the prior day, we've barely touched here. We're probably going to touch again, and then we're going to hit the IB low of the prior day, and we may go all the way up to the IB high of the prior day, and we also have as a potential target the 150% IB high for our session the day that we are trading. Now notice, if you take a look at the prices, they came pretty close but never quite touched it, if this was in fact your target. And that happened to coincide with the IB high. So we did make it to the IB low of the prior day. We did certainly with ease hit that target, But the second target, we seem to have come close to it and then backed away from it. And this is why, as I mentioned before, I usually will recommend taking your profits 2 ticks, 1 or 2 ticks below the actual target level to ensure to ensure a fill, and then at the same time, just in case something like this happens, you're able to capture your profit pretty close to your target. Now, we dropped back down here, but notice we came back up to about the same level before we dropped. Certainly, if you were a swing trader and you wanted to stay in the trade longer and you waited till the next day, you will have more than reached this target. Prices continued to move higher, and you would have even gotten all the way up to the IB 200% high level up here. So that is our first question. Now let's take a look at our next practical exercise question right here. In this case, the chart, well, it isn't below here, but anyway, the chart that we have before us shows the open and the initial balance for Thursday, March 27th. Do we anticipate prices to continue higher or drop lower? Explain your answer. Do you see a trade setup, and describe the trade? Well, let's apply the same analysis we just did a couple of minutes ago to the prior chart and see how it fares in this case. Is there a trend? Well, it's kind of interesting here. If you take a look at what's been happening, prices have been dropping. In this case, I only see the 20 sloping down and the 50 below it. And they're very close together, again sort of affirming this idea that prices have been dropping. And so now, all of a sudden, I get one big green candle. Am I ready to go long or not? Let's take a look at a few more interesting facts about the chart and see if we can gather enough data to help us make the decision. So we do know that there's been a move to the downside. Now, do we have a bullish or bearish open? Well, we started out with a negative 30-minute period, but we took out the high of that period, extended the range higher, and we closed the initial period actually higher than the open. So this would be, in fact, a bullish, not a bearish open. So we have a bullish open in a downtrend. Did our V range expand lower or higher? Very easy question. It did expand higher. Another sort of bullish sign. Now, is our 5 SMA rule in effect? Well, we closed above the 5, so there's the first piece of that rule. The second part of the rule is we have to have the next candle take out the high of this period that just closed above the 5. And we don't have that on this chart, so our 5 SMA rule does not apply in this case. All right, where are we relative to our prior IB values? Well, if we take a look at the prior day, this was the 200%, and this was the 150% low, and this was the IB low of the prior day. We are well below all of them. So we are quite a bit lower. There's a possibility we may want to come back, but we haven't penetrated any of them. We don't really have any signs of strength or a strong reversal on hand yet. So I would be very reluctant about a long trade. By the same token, I would also be very hesitant to think about a short trade with the different elements that I'm seeing. In addition to that, yes, the stochastic is down here below the 20 level, so that is an indication that prices may move a little bit higher. Nevertheless, I don't have any of my rules in place. In this case, I would usually stay out. That would be my option. I just don't have enough information to be comfortable to make a trade. And I have conflicting signals. And generally speaking, I find that it is not prudent to go against a trend. And the trend I see is down. And I don't have enough to really give me confidence that I have a strong reversal at hand. So let's take a look if we in fact remove the cover, and what happens. Prices actually continue to drop lower. So as a possibility, we discussed the option of no trade, wait to see what happens, and then perhaps this third period as it came along and I noticed that we actually did not take out the high, did not move any higher, did not extend the range higher, and I did not get my 5 SMA rule. Certainly there's no range extension up here. Then I would be inclined to take a short trade, and it would have been a brief short here for a little bit. But we didn't see that, and we didn't know that. So given the information that we had, no trade would be reasonable. You don't always have to take a trade. Sometimes the best thing to do is really to sit on the sidelines and wait until you have the structure and all the elements that you need to take the trade. And that's why it's very important to follow rules and not to feel compelled to have to do something. Only act when the elements that you need to have in place are there for you. All right. You could also take the short entry, which we talked about. Once this becomes apparent, of course, once this becomes apparent, you would be able to short, and I would short the minute that we take out the low of this candle. I would enter at the best price that I could get and take it all the way down. And in this case, this would have been a good potential target. It's a value area low from a prior session. It didn't make it all the way down to the IB low, but it did make it down to this value area low. Those are intraday trades, so they'll have a few points in them, not a very big move, but certainly that would have been a potential trade if you would have liked it. And as a stop for my risk management, I would have selected to put it right up here at the IB high. That would have been a very safe point if in fact the market were to go against me and start moving higher. Certainly I better be out of that trade as quickly as I can if we were taking out the initial balance high. All right, on to our third and last question. This chart shows the first 3 periods of a trading day. Based on the chart information, did prices gap up or down that morning? Did prices gap into support or resistance? At this point, would you take a long or short trade? Where would your targets and stop be? Well, let's see if we can answer some of these questions. And the first question is, did prices gap up or did they gap down? That should be really a fairly simple question, and let's see if we can answer. We closed back here on the prior day, right about here. That was our close, the high of this period, the high of this candle, if you will. And then we opened up here, and it looks like we moved higher and then came back lower and created this spinning top. Then it was followed by another period of a spinning top. So obviously we did gap up. Now the next question asks you, did we gap into support or did we gap into resistance? The answer is really quite simple. We don't know. We can't see to the left. But what I wanted you to get into the habit of doing is looking to the left. Certainly on your charts you will have it, but I wanted you to be aware that when you don't have that information, it is a disadvantage, and that it is very helpful to always look to the left. So in this case, the answer is simple. We don't know if we gapped into support or resistance because we don't see what was going on at that price range where we just jumped into last. So we have to look into that to be able to answer that question. Now, at this point, would you take a long or short trade, and where would you put your targets or stop? Well, is our SMA 5 SMA rule in play? Absolutely not. We're above the 5 SMA. Now, as far as our traditional questions, is there a trend here? Well, if you take a look, I have the 20 simple moving average, and then I have the 8 above it and the 5. That looks fairly bullish to me, and it is. When you have that dynamic going on, the momentum is to the upside, and sure enough, we ended up jumping, gapping up from this close all the way up here. Now, naturally, gapping up simply means that we had some buying going on during the evening session, and the evening session closed higher, and that creates the gap up for us. So let's see, do we have a bullish or bearish open? This is actually a bearish open. Take a look at what's happening. The range is extending lower. We came down to here and then even lower yet. And moreover, I have two red candles, each of which has made a lower low and a lower high. That is as bearish as we can be. That is quite bearish. So again, we had this up trend based on our moving averages and a gap up, but then I have two consecutive candles that are bearish, conflicting information again. Did our IB range expand higher or lower? It did expand lower in this case, and you can see it right there, the step action. Very easy to discern. Is our 5, we talked about the 5 SMA rule, and it is not in play. We haven't even made it to the 5 yet. We're certainly heading towards it, but we're not quite there yet. Where are we relative to the prior IB levels? Well, the prior day, this was the 150% high, and it looks like we were rejected there and dropped lower. We closed right at about the IB high of the prior day, and then we continued lower. But we haven't yet gotten to the IB low of the prior session, which is this line right here, the cyan line. So we're sort of hovering above it, and certainly if I were to take a short, that would be a very reasonable target, this IB low there. Now let's take a look when we uncover things at what we can see. The next and the third period did drop lower. It continued lower. It did not quite make it to the initial balanced low target that we wanted. What we then found happen is it did close below the 5, and interestingly enough, we had a period that actually dropped lower. So we had a lower low or a range extension to the downside with the period that followed, even though we had this big green candle. Now take a look, and this happens often, by the way. We also took out the high. So we've got a candle that drops a tad lower, one tick lower, and probably a tick or two higher. And believe it or not, the purpose of that candle is really to confuse and also to trap some shorts and possibly even some longs. In this case, what do we do when we have that? Well, as usual, since things aren't clear at this point, you would wait and see what the outcome will be. And if you take a look at the next candle, after that, the next period, it actually moves lower. Then that really indicates for you it's time to take a short, and you get the best price that you can. You're going to be in it for a while. Notice what happens. Prices now start to drop and continue lower. Now, I should have also pointed out, I'm going to go back to this question here. It should have been very obvious that in fact prices were going to drop and move lower, because you have one cluster up here on the profile and another cluster below it, and the only way this could have happened, since this is the open of the day, is for this to have happened towards the end of the day, meaning that prices would drop lower. But in a way, that's cheating, and we don't have that information when we actually trade live, so that would not have been a good answer to use the additional information from the profile that was there. But I just wanted to make you aware that you could have easily detected that prices were going to drop lower simply by that observation or by noticing that this was the case on the profile on the chart. All right, it is time for us now to shift gears and begin talking about a very powerful concept in trading, and that's the VWAP. Now, what in the world is the VWAP, and how is it calculated, and why is it so important? All very critical and significant questions that we will answer. First of all, what is it? Well, it is really an acronym for volume weighted average price. That's what VWAP stands for. Everybody refers to it as VWAP. Rarely will you hear anyone say, okay, what is the volume weighted average price here? Now, it is a numerical value, or it is a measurement, and so it has to be calculated. Thank God no one has to do the calculation for it by hand. Given today's platforms, any platform that features the VWAP will automatically calculate and draw the VWAP for us on the chart, making it very simple to use. Certainly on Market Delta or Investor RT, it is a built-in indicator and very easy to pull up from the indicator window, listed under VWAP. So it is a measure that calculates the price at which the majority of trading activity takes place for an instrument during a given day. Now, the definition sounds a lot like the volume point of control, but it is calculated in a very different way from the volume point of control. Well, how is it calculated? Well, you take the total, the sum of the number of contracts traded at each price times each contract price at each price level, you multiply those together, and then you divide by the total contracts traded during the day. So it is a mathematical calculation, and it changes from one day to the next. And it also certainly changes during the day, but the initial value for it changes at the open from one day to the next. We always begin with a new VWAP whenever a day session opens. Now, why is it important? And this is really the key question. The VWAP is used by institutional traders and pension funds. It is very widely used. Many of their buying and selling algorithms are actually structured and designed around the VWAP. They often will break up their orders, their trades, into multiple transactions. So they decide what quantities they will be buying at different levels based on the volume weighted average price. And having or knowing this information is very helpful. And as you begin to see how prices react to the VWAP on a chart, it will really enhance this significant point that I'm trying to make about that, in fact, many large traders do use it. You'll see it in action. Well, what is the VWAP concept, and what is this all about? The concept is really very simple. The idea is that if we buy at a price that's lower than the VWAP, then that must be a good price. Good price meaning fair price or a below market price. And the opposite is true. If in fact we're buying at a price that's much higher than the VWAP, then it is a good selling price but not a good buying price. It's overpriced, or we're paying more than we should for the instrument. So ideally, really, you want to be, if you're going to be buying anything, you want to begin accumulating and buying below the VWAP. And if you're going to be selling, you want to sell more and more as price deviates and moves away from the VWAP. So the greatest quantities you want to sell would be the furthest away, and the most you would want to buy is when prices are well below the VWAP for that particular trading day. Now let's take a look at it and see what it looks like. In this case, I have nothing on the chart. It's, again, I like the 30-minute charts, and I've been using the ES Mini because of its volatility and because we can illustrate the concepts easily on its charts. The VWAP, as you can see, has a main trunk line and has several lines that indicate how far or the extent of deviation from the main line. Now, each day, as I mentioned earlier, we begin with a new value. And in this case, since it's a Globex market, it is a 24-hour day that we look at. We don't look at it in terms of the day session. We look at it in terms of the 24-hour market. So each of these here is here's Friday, and then here's Monday. Each of these is a 24-hour period, and this is what the VWAP looked like during each of those periods. And if you notice here, we begin with a new value. It's a new day. This was a new day between Friday and Thursday, and then certainly back here again when we get into Tuesday, we begin with a new value. It happens to be right about the same value as before, but really technically every day begins with a new value. New value each day for our VWAPs. Now, the lines that you see, these colorful lines that extend out, this is our main trunk line of the VWAP. It's the light gray line. And there are 3 lines above it and 3 lines below it. The first level above it and the first level below it are really both one standard deviation, or the first standard deviation, away from the VWAP. But one standard deviation below and one standard deviation above. Now the second line is the same thing, except this is the second standard deviation above the second standard deviation below. And naturally, by now you've probably guessed that the third line is nothing more than the third standard deviation from the VWAP. Now notice how each day the shape and the look of the VWAP is very different, because different volatility, different levels of activity, different ranges. As the range begins to expand, so do the standard deviations. The one thing that you do see right away from this chart is, in fact, the VWAP has been on an upswing. You can sort of see we began here, we're moving higher, here, higher yet, and all the way up to here. So the VWAP also is another useful tool to help us sort of identify direction and which way we're going. Now, there are a number of strategies that we will look at relative to the VWAP and how to use the VWAP. I'm going to begin with a very simple one. Notice we haven't yet introduced the profile into the VWAP and gotten into some of the more intricate things that we would need to look at. I'm going to begin with something very simple. So there are many traders out there that trade the VWAP and they don't know anything about the profile, and they don't use the profile. The profile certainly will enhance some of these strategies, but if you didn't know anything about the profile, here's a very simple trading strategy. This trading strategy is based on the concept of how far price deviates away from the main VWAP. And remember, we talked about the concept or the theory that the best time to sell is when prices significantly deviate away from the VWAP. The best time to buy is when prices are significantly lower than the VWAP. Now let's operationalize these terms significant. What do we really mean by that? Well, just think about it. If in fact prices are 3 standard deviations above the VWAP, so all the way here, and our VWAP is here, that sure seems like a good opportunity to begin selling. And so the strategy is really quite simple. Once price gets away from the 3rd standard deviation and we get a close below the 3rd standard deviation, you take a trade in the direction towards, in this case it would be a short. Your entry would be a short and your target would be the VWAP. And most of the time it does make it to the VWAP. Sometimes you'll see prices oscillate back and forth before they come down to the VWAP. That does happen. But for the most part, quite often, a reasonable target is for prices to come back to the VWAP. Now, if in fact you are going to do that based simply on the theory that when price is 3 standard deviations away from the VWAP, it is time to consider selling. I get my close. My close is inside of 3 standard deviations, and I go ahead and take my short. My stop obviously would be right at the 3 standard deviation level. The stop is very easy. So we got our entry, and now we know where our stop would be, and we've also identified our target. So very simple VWAP trading strategy, simply based on the range of fluctuation of prices away from the VWAP. Now, lest you think that that doesn't actually present many opportunities, you are wrong. I'll show you that even on this chart, there are a number of opportunities because, of course, you can take longs and short. In this case, the trade is the exact opposite. We now want to buy, and look here, right at the standard deviation, you have a tweezer, and prices are pushed higher, and certainly we get a close well inside of the 3rd standard deviation. And we continue, and notice what happens. This trade ends up reaching our target, but it doesn't reach it till the following day. So you need to keep that in mind when you're taking your trade, and have a reasonable expectation as to when, as far as the time duration of when you might reach your target. But more than often, if it's gone to such an extreme, you will reach your target. And you can see here also what I was telling you earlier, why this is such an important strategy. Look at all those big wicks down here. These are not caused by, these buying tails are not made by small traders or individual traders. These are very significant, and these are typically institutional buyers and pension funds and major participants in the market. So it re-emphasizes for us the importance of the VWAP. Now take a look here. Same thing again. We jump up to the 3rd standard deviation, come back down to the VWAP. 3rd standard deviation again, come back to the VWAP. All right. We talked about a very simple strategy strictly based on the VWAP, and you notice I did not include anything at all on the charts that we were working with other than the VWAP. And sometimes keeping things that simple is really Very helpful, very useful. The more you clutter your charts, sometimes the harder it is to see opportunities. So I'm all for simplicity. Whenever you get a chance to simplify something, certainly go for it. Okay, now we're going to have the VWAP meet the profile. And that will open up some very interesting opportunities and lots of strategies. I will share some of them with you. They will all revolve around the same concepts that we've been discussing and talking about, except now we will have some profile parameters to add to the discussion. And then we will also take a look at the versatility of the VWAP itself. In this case, on the chart, we have a 24-hour period. Notice Friday. And we have a profile for that full day. So we consider a full day a 24-hour period, and it is a 30-minute chart. Now, before we begin looking at the next day on Monday, let's take a look at how things were developing during that day. The first thing that you will notice during this 24-hour period is the VWAP was rising. That is a very bullish sign. The VWAP also is an incredibly important level of support and resistance. And when you begin to see it rising, that's indicative of, again, momentum to the upside. And you can begin to trade on that basis. Very simple strategy. Using the VWAP as support, every time prices drop below the VWAP, okay, and then come back up and take out the high of the prior candle, that is an entry opportunity for you. So let me repeat. Close above the VWAP, okay? So here we are going to close above, and in this case we still don't have the profile developed, so we're not using any of the profile parameters. We're really using the slope of the VWAP. We're using the fact that it is a strong level of resistance, and notice prices come back up, we close above it, and then when we take out the high of this candle, go long, and you're going to get a little bit out of the trade. Depends. Sometimes it may just be a point or so, but there's usually something in that trade. So we have to have a close above the VWAP, and then the next thing we want is to buy the range extensions based on the VWAP as support. And notice here I had a bunch of potential entries, one here, and the low or the stop would be the low of the candle that closed above the VWAP. So in this case, this candle was it. It's a red candle, but it closed above. So as soon as I take out the high, I'm in it and I take the long. Similarly, same thing here again, and we go up a little bit higher. Here, same thing, and this one was a more explosive move. You don't always get those, but every once in a while you luck out. So this is another technique, another strategy for trading the VWAP, using it as a level of support to trade from. All right. Now we are going to look at the VWAP and its relationship from one day to the next. In this case, we have a gap up. So when we closed on Friday, this was where the VWAP was. When we opened on Monday, the VWAP gapped up. Now, that is a very bullish move. Now, if in fact the VWAP manages to get above the VPOC of the prior day and does not drop below it, that's another very bullish sign. So it did get above it, and certainly here's our trade. We would have gone long. This one took out the high of the prior candle, which closed, well, this one closed right on it. So that was a little cutting it a little close. I'll give you that. Usually you want it to close above it. In this case, it was right on it. Um, but you could have taken the long and it panned out. It was heading towards the value area high of the prior day. But notice, if you were buying every time that prices came back up above, or even if you were buying the dips every time it dropped below the VWAP, with the VWAP again, with the VWAP above the VPOC, you will not go wrong. That's usually a very good trade. But it is safer if you wait until you get a close above and then head higher. But this is a very bullish indication, and you should be waiting for the breakout. Quite often, this will happen, and people will not know what. Well, are we heading higher? Are we heading lower? Look at where the VWAP is. Is the VWAP above the volume point of control? If it is, look what happens. You usually will get an explosive move after a consolidation like the one that you see here. So keep an eye on the VWAP in relationship to the VPOC. And now we're really starting to begin to integrate some of what we know about the VWAP and some of our profile parameters. And that adds a little bit more power to what we do and to our trades. When we begin combining our profile with the VWAP, a lot of new opportunities become apparent, and they're much easier to spot than when the two aren't combined together. So for example here, let me draw your attention to what happens at the value area high when the VWAP extends and pushes higher above it. That is a very bullish move, and you should take that, go long without hesitation when you encounter and when you see that as a VWAP moves above a value area high and heads higher. Quite often the question that people have, well, is the market going to accept the value as we head higher, or is it going to reject? Well, this is a clear indication of acceptance, and prices are going to continue to move higher. And we talked previously about how the VWAP here managed to sustain itself above the volume point of control, and then we get a breakout like this to the upside, very powerful, and continues to rise above the value area high. All right. Now, let's add some standard deviations to our chart with the profile and with the VWAP. So now I have put the standard deviations on, and it begins to even present us with lots of other interesting opportunities. Let's take a look at them. Value area high. Take a look. Third standard deviation. We're also at a value area high. You should short without hesitation. Just a beautiful entry. And take a look at another one here. Now notice how the VWAP just makes it so much clearer, and you've got sort of two systems working together in harmony. Here, same thing, except value area low. Third standard deviation, and I'm below the value area low. All right, so they obviously perceived this was a great buying opportunity. The heavy hitters are in, and prices shoot up. More. Okay, whenever we get a range-bound market, like we see here during this particular trading session on Monday, notice we're really sort of trapped in this range. These days are usually very difficult to trade, and of course you don't see the whole day, so you don't quite know when that you're in fact when you're going to break out of that range, and that in fact you are going to be range bound. Well, take a look at how the VWAP makes it easy for us to identify range bound days. Whenever you see parallel lines one above the other in terms of the standard deviations, and a VWAP that is horizontal like that, you are in a range-bound day. Now, not only does the VWAP do this for us and help us identify a range day, so you could play the range game, but it also gives us the parameters where I could begin taking shorts at either the second standard deviation or the third standard deviation. Same thing here when I see a tweezer. When I see a doji here and I'm heading back up, I'm at the second standard deviation. So I can even capture some of these tiny opportunities that without this framework, without the VWAP on my chart, I'd never be able to see them or capture them. That's the beauty of putting the VWAP in tandem with the profile. Again, very clean, very easy, very simple charts. We talked about the VWAP being an incredibly powerful support level. Now take a look. In this case, we're displaying the VWAP in two different formats, and there are a number of different ways that you can display the VWAP. The simplest of them is a continuous line, but you can also show it as a hollow box. And I like to do both. The reason I like the hollow box is visually it shows me when my VWAP is increasing and moving higher. It also makes it very nice when it's nice and horizontal as we see here. But what's important is now when I have it on an IB chart, it just shows you how powerful this IB level is as a support level as well. In combination with the VWAP, you can't ask for anything more. It is telling you this is a support level. Look at how many wicks you have below it. Everybody comes down here and buys, brings it right back up to above the VWAP, and it's holding until, of course, the next day it gaps up and shoots higher. Now take a look at what happens on the following day. Well, the VWAP opens, this is the level of the first period, moves higher, and so do prices, and then higher again. Look at this sort of step action. Now notice the beauty of this. As I begin to see the VWAP level off and begin to develop this horizontal line, certainly it would give me pause about trying to go long. I don't see the steps moving higher. And also notice here the momentum is decreasing. Look at the gap between this level and the level before it, how it's decreasing. And then look at the gap between this level and that level there. It also helps me read momentum, directional momentum in the market. Now, notice here as we begin to break the VWAP and sort of navigate below it, how we're starting to drop. Next level drops lower. Next level drops a little bit more. And now, to some extent, this is now looking like a level of resistance until we come back up and penetrate or break through it. When the VWAP stops rising, as in this case here, it tells us two things. One, that in fact momentum to the upside is diminishing. We're not going to continue moving higher, and at the same time this may become a level of either support or resistance. If in fact prices had continued to move higher above here and we didn't break it to the downside as we did here, this would have become a level of support. In this case we broke it, broke through it, continued to move lower, so now it has become a level of resistance for us, and it'll be interesting to see if we can come back and overtake it. Alright, now as if the daily VWAP alone wasn't helpful, we also have weekly VWAPs, and the weekly VWAPs are very, very powerful. And I have one on this IB chart, and take a look with me. Here's the weekly. I'm highlighting it with the yellow marker, and of course the daily is above it. The first thing that we want to highlight is the fact whenever my daily is above the weekly, that is definitely a bullish sentiment in the market and a bullish sign. And especially if it is daily rising rather than daily dropping. Now, daily dropping, as you see the case, as we see the case here, and then it breaks through the weekly, that's a very bearish sign, and you can usually expect a decent move to the downside. And also take a look at how the VWAP tends to react to the initial balance. So whenever I see a VWAP breaking an initial balance low, that should be an indication again that we are going to have a strong down move. When I see a VWAP sort of finding support here and leveling off above an initial balance level, it is likely that prices will move up a little bit when it finds support. Same thing here again. We dropped, and then we came here, leveled off, and then we shot up here. We weren't able to maintain the price level we were at, so we started dropping again, leveled off, shot up, couldn't maintain it, and then prices started dropping, and the drop continued lower and lower, and we even crossed to the downside the weekly VWAP. The weekly VWAP is very easy to set up. You just select weekly instead of daily when you're putting the VWAP on the chart. Now, here in this case, take a look at what happened when the VWAP pierced through the weekly. Again, my weekly I'm going to highlight for you. It is this continuous line right here. And here in this case, not only do I have stepping down on the daily, but look at the slope of my weekly. That's a very bearish week. And prices come back up to the weekly, and depending on whether the market will sustain it higher or will bring it back lower, we'll have to see what happens during the day. But notice again here in this case, when the daily starts heading up higher, then you can anticipate that we're probably going to come up to test the weekly VWAP. So it's very interesting to monitor the interaction between the daily and the weekly VWAPs. The strongest moves you want to make sure, if you want continuity and strength and momentum in a move, that you're getting step downs, as you see here like this with your VWAP. These moves that sort of jump up a little bit, come back down, there's not much momentum there, and you're not going to see a big move. And if we were to put in our standard deviations here, you would immediately see that this is a range-bound day because they would all be parallel to one another. The VWAP with the profile framework, whether you use the IBs or whether you use the value area lows and the value area high, and the parameters of the VWAP, it just tremendously enhances the image of what's going on in the market. So now what I'm doing here is I have actually added the standard deviations for my weekly VWAP. And boy, what a powerful addition that is. So now I have my daily VWAP heading lower, and it hits the second standard deviation and then begins to level off here. Also, if I take a look at prices, when they get out to the third standard deviation, and I take a look and see when I get a close above the third standard deviation, like we do here, and a higher high, the chances are we are going to begin to head towards the weekly VWAP for a test of that weekly VWAP. Now, naturally, because the distance is a little bit greater, you're going to see more fluctuation. And in this case, we actually went back down and then headed back towards it. Very, very powerful stuff. Take a look at the step up, heading higher, and then we get up to the weekly. The weekly acts as an incredible resistance level. We pierce through it with the next period here the next day, but it drops back down again. Put the VWAP on your charts. It will really help your trading. All right. With that, we will conclude our presentation, and I invite, as usual, your questions, and I will see you in our 10th lesson.